Yeah, so Challenger is one that we think has a bright future for many, many years to come, and part of that thesis is the fact that we have a strongly growing pool of superannuation assets in Australia. Over time we'll see an increasing proportion of that pool of superannuation assets moving from an accumulation into a drawdown phase, and in that phase the annuity products that Challenger provides we think have particular appeal. In Australia, those sorts of products currently have a relatively low level of penetration into that market, so we think we've got a growing market, low levels of penetration currently that we think will increase over time, and that means a compounding growth for Challenger over 5, 10, 15 years. And Challenger has a dominant market share in that market. There will inevitably be challengers that seek to take a part of that market, but Challenger is extremely well placed for the long term, and it's trading at a price that we think may not fully reflect that long-term potential. So it's a business that we think we may be able to own for many, many years to come, and we expect to see that business become a lot bigger over that time.
You mentioned that.
I think it's, at the moment, Challenger has something like a 70% share, and inevitably all of the big financial institutions will be attracted to that market, and there's a lot of capable players that will seek to get involved. But over 10 years, 15 years, I think what we can be sure of is we'll probably be a little bit surprised as to who we see playing an important role in that market. So don't really know how the market will look that far down the track, but it's very clear at the moment that Challenger is very well placed.